What we have seen in financial services is really the development of the so-called embedded finance trend. What we mean by that is financial services originally being considered a vertical stack alongside many other sectors in the industry, manufacturing, healthcare, consumer services. And what we are actually observing at the moment is financial services flipping on its head and becoming a horizontal layer. What I mean by that is financial services becoming embedded in other sectors. So for example, we've seen this happening already in commerce, where particularly payments have become embedded into everyday sort of commerce experiences. So think about your Uber or Airbnb or your Amazon purchases. We're also starting to see lending, for example, embedded into manufacturing, into supply chain. And so SMEs, for example, are now increasingly able to refinance their stock and their inventory in near real time. Those big changes are continuing to develop, and so specifically we are really interested in what's happening in the transportation industry. So if you think about the evolution of autonomous vehicle, for example, and the shifts that will imply in the auto insurance business, we're looking at energy, and particularly energy where it intersects with financial services, the ability of financing alternative sources of energy, the ability for individuals to participate into the production and consumption of more distributed energy sources. And obviously we're interested in healthcare, where it intersects with financial services, particularly with insurance and banking, the so-called sort of financial wellness sector. But I genuinely think that there is really a long way to go in us being able to really help people making better financial decisions and really prepare for the futures. And I don't know you, but I sometimes still get asked, why would anyone care? Why would I care? And my reaction is, frankly, that this is not just a great business opportunity, but I think it's a really important moral stance. It's an important sort of ethical posture that we need to hold ourselves accountable to. And sort of, I'm thinking about financial services as a really important component of a well-functioning society. And so, I think it is our duty to be able to stand shoulder to shoulder with other parts of sectors that are really sort of making a positive impact in society. I think there's a really big opportunity, there are billions of cost savings, and also a really important, social impact in helping people getting out of debt. Particularly over the last 20 years, we've binged on credit, on free credit, particularly on securitized debt. And so, I think, we really need to think about our role in helping people consolidate their debt, refinance their debt, restructuring and re-engineering their debt. And the so-called sort of debt rehabilitation market, this is sort of the part of the market where people are delinquent, but they're not yet in a write-off scenario, because they would, if they were able and supported, to be able to repay their own debt. I mean, that's worth $125 billion US, and that's in the US alone. So, in my books, there is plenty of business opportunities if we were just able to, harness our creative talent, our willingness to really do well and do good. So we think about financial wellness as this growth opportunity at the intersection of banking, insurance, and healthcare. A space that is really developing to create customer-centric solutions to help people live healthier financial lives. And I think it's really important to reflect on the fact that financial wellness is much bigger opportunity, and certainly goes beyond the traditional sort of employee-backed benefits. They're important, but financial wellness is a much broader space. It's certainly a more holistic space to invest in. And also, it's a different space from the traditional sort of financial inclusion, which is obviously a concept that has been widely used to describe particularly emerging markets. And we think that financial wellness is different from financial inclusion, because it actually suggests that there are novel ways in which we can sort of solve for people's biggest financial problems in lives. We've actually seen a really unprecedented convergence of entrepreneurial talent, of scientific talent, of technological talent, coupled with smart capital, really building these solutions that help people save better, manage their finance, and generally sort of being able to afford to see a doctor and access sort of healthcare solutions when they most need it. So the way we're sort of thinking about financial wellness and all the characteristics of the investments that we're making is that they're all sort of using a combination of behavioral finance coupled with technologies ranging from artificial intelligence or natural language processing, sometimes even robotics. And sort of one example that I often like to cite is a company called Happy Money. And this is one of our portfolio companies, so as a disclosure, we're an investor in it. And they are a growth stage company, they're venture backed, and they basically have a platform that helps people consolidate their debt and over time sort of getting rid of it. When Scott Saunders, the founders, and his team sort of came to us about 7 years ago, they really had an intriguing thesis. They thought that people that have money problems display the same sort of behavior and cognitive traits of people that suffer from post-traumatic stress disorder. So post-traumatic stress disorder is typically seen in sort of war veterans or victims of sexual assault. But when it sets in, it's so severe that it impairs individuals to make even the simplest life decisions, let alone those that have got to do with money. And so 7 years on, the Happy Money team not only has validated that thesis, but they built a really awesome business around it. So what they did, they collected transactional, behavioral, attitudinal, and psychological data about their customers and plug it into this really rich proprietary data set. They've then combined it with artificial intelligence and machine learning to create an alternative scoring system. This scoring system has already proven to outperform the more traditional FICO score. So what the team does, they use this alternative scoring system, for example, to provide really highly personalized recommendations, sort of financial solutions, and help people nudge their behavior towards eliminating their debt, making better financial choices, particularly when it comes to spending, and therefore over time eliminating their debt. One of the things that I particularly like about Happy Money is that they focus on those sort of behavioral items pre and post loan issuance that help reduce the risk profile of the individuals. And so they track with scientific rigor a number of metrics, including what they call the Happy Money Index. So the Happy Money Index is a composite measure of how people respond to things like gratitude and conscientiousness and control. And these are sort of already proven to be better indicator of people's delinquents and write-offs over and above the scoring model. And I think that's a really interesting way of thinking about individual debts. If you look at it from a customer point of view, I think Happy Money sort of helps individuals that are systematic borrower to become systematic savers. And I think that's a really interesting customer experience and customer journey, which is really sort of again bringing us back to the point of being able to do well by doing good.